Hey everybody, Jonathan Broadbent here. It is 5 o'clock on the nose, November 1st, 2023. Welcome to November. We are surprisingly almost through 2023. And if you're like me, you're just making it by the skin of your teeth. I have today a question from an alert reader who's presented the following question. My question would be investing at all in companies, even those that aren't woke, with the world finances about to collapse. That's being very pessimistic. That's the writer's words, not mine. Um, Boy, that's we're starting off with a tough one today. That there's a lot to unpack there, and I could probably do at least an hour on that. I'm going to try to make this super brief and quick. As promised, I have asked our listeners for questions, and that is indeed a pessimistic outlook on world affairs and world of finance and business. ESG and plans for CBDC and all that woke nonsense that's trying to assert itself. It's trying to get its fangs into the worlds of business and finance. A couple of things. The first is, if you're not already, make some plans to go unwoke. Get your money out of the hands of the woke left. They're using it to harm us. It's like I tell people to think of it this way. Think of being at war. And there's some argument that we are actually at war, including, I'm going to make a little side note here. Look up something called fifth generation warfare and the two generals. Effectively, it looks like this. There's a strategy that deploys warfare against an enemy that includes an anything but tactic, as in everything is on the table except traditional kinetic warfare. And looked at in that light, I think maybe it's arguable that we are in a state of war. Those are my words. But looking at the perspective of businesses and finance and what to expect, um, if you draw the same conclusion I do, that we're in a state of war, would you pack up, would you buy ammo and send it to enemies? No. The answer is obviously no. You would not send supplies, military weapons, munitions to an enemy. Effectively, if you are allowing your money to go into woke managers, those managers are using that money against the interests of the United States, against the interests of capitalism, of Western values, Judeo-Christian ethics. You name it, they are attacking all of that stuff. We're experiencing it. If you're feeling uneasy and are not sure where to place it, follow some of my other posts. Hopefully they make sense to you. But in that context, if we are putting money into these managers that are opposed to capitalism and Western values, it's like giving munitions to an enemy. So the question about what to expect is not one that can be easily answered. We are like most any other form of war. We're partway through it, and there are some victories and there are some defeats. One thing to keep in mind, and I say this often during discussions, the in my estimation, the left control the media and social media, which means they control the narrative. For those of us who are patriotic, constitutional conservatives, we believe in things like capitalism and Western values, the Judeo-Christian principles. We're not going to be privy to our successes. It's not like the news is going to turn on at night and say, look what the great thing that the conservatives accomplished. That's not going to happen. But we are winning some battles and the fight continues. So I'm going to start by saying, no, I don't know definitively how this is going to end, what the outcome is going to be. I know that there are concerted efforts on both sides to try and win this battle. If we lose, then America is full-blown, undeniable communist dictatorship. Of that, I'm certain. We have all the trademarks, all the signs. People want to deny it, but it's all there. So when it comes to investing, it's not just where not to invest. And I talk a lot about that. I highlight woke companies and causes. Now, with the roll in of the 12 years of analytics, research, and studies um, of Second Vote, we're going to have a lot more to talk about. We've got all of their data set that really it assesses tens of thousands of companies and investments and financial institutions and organizations on the 6 pillars of freedom. Look up secondvote.com. It gives a description of what that looks like. But in addition to, we're going beyond just where not to invest, where not to give money. We need to talk in real, clear, tangible terms about where is good to invest. So there are a number of, well, 2 things. First, think of it like a kind of a spectrum. I'm just going to talk about the far left, ultra woke ESG nonsense. It's opaque and murky. I've made the argument again and again and again, and I'm going to keep talking about how that is really just a manipulative tool designed to give control, artificial control, to a select group of managers and influencers. And it makes really wealthy people more wealthy. That's it. That's the sum total and extent of the whole ESG thing. It is a whole, there's no there. There's no tangible, definable metric to it. On the other end of the spectrum, we've got Judeo-Christian principles. You can look at things like pro-life, Second Amendment, constitutional freedoms, freedom of religion, all those sorts of things. As I said, Second Vote has been assessing those sorts of things for 12 years. In the middle is really where most investors are and probably should be. There are some principled conservatives that really do want to make sure that their portfolio is, for instance, pro-life, and it meets their values. I call that vote your values, and that's terrific. We can talk on that all day long, but in the middle is just, it's shareholder first, and that is neutral. So in answer to this question, where should I invest, and should I be investing through the course of this thing? I'm not going to say that I can predict clearly that we, the people, are going to win this battle. I do hope, and I do know a lot of people that are just, we are hard at work trying to win this battle, and I'm hopeful. But part of that is maybe looking at good places that are helpful, that are poised to help win the battle. And there's a lot of that stuff out there, like new and developing social media, news organizations, content delivery vehicles, even web storage. I had a call a few days ago with a group, I think they're private. I don't think they have any plans to go public, but they're a private group that they do website hosting and those sorts of things. All of that stuff, I believe, is tremendous opportunity for investment. So then we're doing the exact opposite of what the ESG woke far left want us to do. Instead of just allowing our hard-earned money, trillions and trillions of dollars, to go into funding people that oppose us and are fighting us, we can be putting it toward patriotic endeavors that help rebuild and create what some people want to refer to as a parallel economy. But at a minimum, I believe that it should be shareholder neutral. And I encourage everybody to get in the fight. First of all, be aware of what's happening in your portfolio and in your life, the woke and the unwoke, and get involved, and defund the woke, at least to neutral in your portfolio, just shareholder neutral. Those are, I don't want to get too far into the weeds. I'm trying to make this quick and short and concise, but there are things that have been used in the world of finance forever, since the beginning of the stock market, to assess value in a corporation. If you're thinking about investing in something, you want to look at the tangible things that you can define, like their research and development and their cash flow and management structure and their profitability and the profit ratio, if they pay dividends and if they pay them consistently, all those things, I call them fundamentals. And the fundamentals are really good stuff. When you start getting into ESG, that's where the wheels come off of that train, because you start getting into it and nobody really has any clear definition of what it is. It's purely designed, I believe, to be subjective. And it allows people to go in and slap this label that such and such company is ESG friendly. Um, but the as I said, the opposite of that is really where we need to be focused. We need to be looking at managers and investments. Oh, sorry, two more things. I made myself some notes in preparation for this. One is the there are people out there, a lot of them, who watch the owners of companies closely to see what they're doing. You may not know this, but members of Congress, elected representatives in Washington, D.C., and the owners of publicly traded companies are required to disclose their portfolio activities. And there are people out there that watch and track this stuff. It's called Rule 144. You may want to look it up. Rule 144. So this factors in. I'm kind of bouncing around a little bit, and hopefully this makes sense. If it doesn't, ping me. I'll clarify with either a direct response or additional video. But with Rule 144, you can start to see the owner of, let's say, Apple Corporation. The owner of Apple, you can see what they're doing in their portfolio, or members of Congress. And if suddenly people start selling something off, that goes directly to this question: should we be pessimistic? And within a few hours, you're going to start to see activity if something nefarious were planned with any given company. But remember two more things. One is it's not a requirement that your money be invested with a manager. We've fallen into this sort of, I won't call it lazy, but it's a quick point and shoot, easy shortcut answer to go to things like mutual funds. But just about anywhere you can imagine and name, your IRA account, your 401k, your regular brokerage account, investment accounts through your bank, you can own individual companies and stocks and bonds. The value there, the advantage is you know what you own, and it allows you to track and be shareholder neutral, or vote your values if you're on the right and conservative like me. And it also stands to reduce the fees that you pay, which is an added bonus. So one more piece, and then I'm going to sign off. And hopefully this answers the question. I'm going to get back to this person with this link to this video and make sure that I answered her question. But the other piece is some investments. Some of the investments that are available out there are what are called private investments. Those are not publicly traded, and they represent a good opportunity, especially for patriotic endeavors. When I'm talking about media organizations, new news platforms, technology, all those sorts of things that are going to build and be infrastructure for we the people, the patriot types. A lot of them are really small, and they're not public, and they're not traded. Maybe they never do get listed, and maybe they never do trade, but some of them represent good opportunities. I'm actually talking to several of them now about ways to get them into the spotlight and have people talking about funding them. That's another good opportunity. Stay tuned on that one. And that also goes directly to this person's question. I don't think we should be hiding. I don't think that we should go to any precious metal or something. I think those might be a good part of your portfolio, but I don't think that we should be in duck and cover mode. I think we need to hold on to hope, and I think we need to be working on building and, first and foremost, defunding the woke. Get our money out of the hands of those woke investment managers who give our hard-earned dollars to far left woke companies and causes. I hope all this makes sense. Remember, shoot your questions at me. I'm going to do my very best to jump on 5 o'clock most every afternoon during work days, Monday through Friday, answer questions and drop some of these breadcrumbs. I hope you have a great day. Bye-bye.